Welcome to our weekly market analysis. This analysis for the weekend of January 31st, 2026. End of January, entering February. Amazing. Well, very eventful week and even more eventful week to come. Last week on Wednesday, we had the Fed rate decision. It was more of a non-event. The rates stayed steady after three rate cuts, and there were actually two members were looking for a 1/4% rate cut, and the markets took them on stride. But the bigger news was on Friday, the President Trump's nominee, the new Fed chair, and looks like it could be Kevin Warsh. Now, interesting thing is, in the past, Kevin Warsh has been pretty hawkish. We go back all the way to President Bush, but in recent years, and especially past 2 years, he's been looks like he's more dovish, and but it looks like he had an effect on the the precious metals. It said indirectly, but we will dive in more into what happened in the precious metals and including the silver sell-off, a big one. We'll review that. Also, the concerns have been about that really the government shutdown, actually partial shutdown as of Saturday could happen. And that's also concerning the market. So volatility is pretty important. And I've been talking about this for the last few weeks, the volatility of VIX. The professional institutionals have been buying the volatility. And the geopolitics of what's happening in the Middle East and the effects on the crude oil. I mean, looking at the Persian Gulf and Strait of Hormuz. And on top of that, this coming week, we have on Friday the non-farm payroll. We've had some of the biggest Magnificent Seven companies came up with earnings last week. It was Microsoft or Meta or Apple or Tesla, and we still got more. We got Google and Amazon coming up this week. So, as always, I like to start with looking at the Bitcoin. We're going to analyze the cryptocurrencies. We see what happened on Saturday morning with Bitcoin. Crucial points in the cryptocurrencies, especially Bitcoin. We will watch that. As I mentioned, silver completely imploded. I did a video on the gold trade independently. I hope you've had a chance to watch that. And speaking of what my actions were, anyway, silver imploded 31%. Remember, the parabolic movements, when the markets go up, we call it on the escalator, they usually come down on elevator. And that's what happened with silver. A lot of enthusiasm, big megas, a gamma squeeze on silver and gold. And well, silver came down 31%, the worst single day in 45 years. There's been a lot of retail investors speculation. It has been, again, it reminded me of these meme stocks when we go back during the COVID era, if you recall. So it's been pretty volatile. Also, gold dropped 7.5%, platinum dropped 13.1%, and palladium dropped 11.4%. As I mentioned, one of the catalysts was, well, is Warsh uh, dovish or not, and what's going to be effect on the interest rates. And I wrote this, UBS had warned about this. So when we look at the economy, as I mentioned, the last week's we looked at the Fed decision. It was kind of a non-event. But this week, we want to pay attention to our non-farm payrolls coming up. So that's, and then also the uh, all the unemployment and also the earnings. So hourly earnings. So the weekly hourly earnings. So let's watch for that. Well, what we see has been a little increase in the 10-year US notes. UK gilts have been all over. We see we are in line for past 30 days as far as the yield curve, pretty positive. And we see this big move from the spread from 2 year to 30 year, very steep. As far as the markets, what kind of with all that volatility, we noticed that really the Dow was only down 0.42%. Nasdaq was really flat, and S&P was actually up 0.34%. On the other hand, with all that big move, and we will see it on the charts, gold dropped only 2%, copper was up 0.33%, but the big winner was the crude oil up almost over 7.6%. Really, what we are right now, we are only 1.41% from our this year's all-time high of January 12th, and S&P is really down only 0.57 from January 27 highs, and Nasdaq is down 1.66% from its January 28 highs. So as a whole, the markets were really completely flat, non-event. The big losers were the US small cap growth, 3.66%. Remember, the rates affect the small caps, and they are very vulnerable in regards to that. On the other hand, US large value was up 1%. Now, when we look at all the indices, what we see here is uh, Dow Jones Industrial broke below its 20-day moving average. S&P is sitting right on its 20-day moving average after the sell-off on Thursday came back and Friday has come back above 20-day. Nasdaq is right below its 20-day. We see the Wilshire 5000 sitting right on its 20-day. And it was a big drop from for the Russell after we see this doji. This almost looks like an evening star. We just broke on the 20-day moving average. So we want to watch that. We want to watch the small caps and what is happening with the yields and see would they rebound above the 20 or would they go all the way back to 50, go down to the 50-day moving average. As far as the yields, we see the yields had gone up, but then they retraced, which is good news, came back, and we are sitting at 4.25%. The dollar, that was a big move, biggest drop. We've had a huge drop for the dollar. For the past year, it's been coming down. And then what happened was we had a big bounce on Friday again with the which affected the precious metals as well. That's why we see the commodities this big. Again, this is almost like a parabolic move, came down, and we see the crude oil has had a big move, again, geopolitics involved. But this is what you see with gold. Look at this huge bounce from 20-day moving average all the way coming down in one day, this gap down, and we bounced off right at 20-day moving average. So that's important to watch the support zone. Volatility, over the week, there was not much movement, but on a daily basis, look at this huge volatility. When we look at the sectors, this is based on relative strength. So we want to see RSI, the strongest sectors. We see that energy, and no wonder we can compare it to the oil. And also, we've talked about the staples, the consumer defensive. We look at the Walmarts of the world and Costco's and Pepsi and Coca-Cola and Procter and Gamble. So, been a big move. And communications, we look at Meta and Verizon. And then we see basic material. Well, we've had this precious metals have the big move, except Friday, which we went to the 20-day moving average. Industrials have been consolidating. And then we see the real estate just standing on the support at 20-day moving average. So all of these are stronger than S&P. The weaker than S&P are utilities, pretty flat, and consolidate convergence of 20 and 50. We are looking at that, and then we see the discretionary, they actually broke below their 20-day moving average, and the healthcare has gotten below 20 and 50-day moving average, and technology also, we see that really rotation from technology and financials going to staples and communications and then energy and the basic material. As far as the global markets, international markets, we see it again. South Korea is still a leader. Belgium, Brazil, Hong Kong, they're all strong. United Kingdom, the weak side, India continues, and then big drop in Canadian markets, especially on Friday. And again, the commodity uh, and reflection, and then Wednesday, France is also weak. As far as the sentiment goes, we see that not much has been changed in the last 2 weeks. We are still, the bulls are above average, bullish, 44.4%. The bears are right at average, 30.8 versus 31%. We are still in a weak greed side on the CNN fear and greed, so the markets haven't really uh, been too concerned about what's going on. And also from technical point of view, we have 67.5% of the stocks above their moving averages, so that's they're in a bullish zone. When we look at the charts, we see that yes, even after the sell-off, which was a nice volume above average, we basically, although broke below the 8, we just came on the 21-day moving average. We still see these um, long tails, so there have been buyers coming back. So we watch to see if we can hold this area, and then that 50-day moving average becomes your support. Looking at this, I've been going over this for the last really few months, and I've been talking about what we see here as far as let me get my uh, pen. I want to go back to end of October, and let's take a look at this zone. Basically, we've been consolidating back and forth, and this really haven't gone anywhere. This like 98.50, 60, 850, 6900 zone has been really place we haven't done anything, and there is this coiling going on. So one that's energy has to go somewhere. So it's important to watch that. And we see that in the Bollinger Bands, and we are sitting right on the 18-day moving average. Um, we are becoming overbought. We'll see if we can become embedded this coming week. But you see how the MACD is flat. And then basically when we go on a weekly basis, we see how Bollinger Bands are narrowing, although we are above the 18-week moving average. So on a weekly basis, we're looking okay. As far as the stochastics, we are embedded, but MACD has gone again. We're just squeezing here, and MACD has gone negative, although it's narrowly. When we look at the Nasdaq, we have gone, momentum has come down. We shook off the overbought situation, but we have under 18-day moving average, but above the 100-day moving average after touching the upper edge of expected move. Russell had a big sell-off, so in last few days, and basically what we see is we broke below 18-day and momentum is down, and MACD has crossed. Again, concern about the rates. What we see on the Dow, we have broken below the 18-day moving average, momentum down, MACD is negative. And also in the transportation, we're below the 18-day moving average and momentum down, MACD is down. When we look at VIX, on the other hand, we see the volatility. We went outside, came inside. Friday was uh, again, started strong, hit the upper edge of Bollinger Band and came back inside. And that's how markets reversed. And we see that although momentum is down, but turning up. So, but MACD is positive. But this is what I pay attention to, this VVIX, the volatility of VIX, a lot of call option buyings on VIX, and we are still above the 100-day and 18-day. We're looking at the golden cross. 18-day is about to cross 100-day, and look at this big move on Friday. We are almost getting to a positive momentum in stochastics, and MACD is positive. And when we look at on a weekly basis, we are above the 100-week moving average. And momentum, although still negative, but close to positive, MACD has crossed. As far as yields, um, we had talked about this. We went outside the Bollinger Band, came back inside, although we're still above the 18-day moving average. That is, the yields are still up there and momentum is still up. MACD is pretty flat. So when we look at the weekly, though, we see that, which is good news, we're still under 100-week moving average. So we like actually turned down, although we have become embedded, MACD is positive. For the market's sake, we like that to come down to 18, at least 18-week moving average. So we have a challenge here, which is good. We don't want the yields go up, but the momentum looks positive. So want to watch that. On the other hand, the 10-year, we see we are under 18-day moving average. We see the MACD, on the other hand, is about to break, so that's positive. On a weekly, we're still holding above the 100-week moving average, although we're becoming embedded. Stochastics and MACD is negative. When we look at the 30-year, we are below 18 and 100-day. So we see the long end is even weaker, but we see these long wicks. So let's see if they can bounce back. And on a weekly basis, we see we are still below 18, flat 18 and 100-day, 100-week moving average. It's been very difficult to break above these moving averages, although we are oversold. But MACD is negative. As far as the dollar, big drop on the dollar. Finally, we had a bounce on Thursday and especially Friday. As you can see, we did go outside the Bollinger Band, came back, became oversold, and MACD though is negative. And then we look at on a weekly basis, we did go outside the Bollinger Band when we just had a major doji, came back inside, and we are momentum is down, MACD is negative. And then when we look at euro, opposite of dollar, went way outside this Bollinger Band, came back inside, and now we shook off that overbought situation. MACD is positive, and gold. Huge move, but look at we've had this big move, been outside the Bollinger Band, came inside, went outside, and we had this big sell-off. We went below the 18-day moving average, but we are still way above the 100, so that's your support at 42.47. We were embedded and we just broke down, but MACD is still positive. But when you look back, it's one, two, three, four. So this is where we were this was last week, and here we are. So it's not like, we have huge drop. It been just moved. We had moved up so much in the past few days that there was definitely a big profit taking. And I don't blame taking profit at 5,500. There's nothing wrong with that. As a matter of fact, we talk about in trade of the week, we did do that. And we see again, we were on a weekly outside the Bollinger Band, went again, this is huge move, and finally came inside the Bollinger Band, and we are overbought though still. Although MACD is positive, but look at this bands expanding. And then what we see though on our linear regression channel for the GLD, we see we are right on that 21-day moving average. Huge volume. But we hit the upper edge of we hit the two standard deviation on linear regression channel. So we are having a support on -1 standard deviation. Let's see if we can hold that. Um, Silver, as I mentioned, was the big news. But again, look at this move. And we've went outside, came inside. We were embedded, but then just right off that we just broke right below the 18-day moving average. But we're still above that 100. So we see that Bollinger Band coming at about $67. So we'll see if that offers a support. But MACD just crossed the negative. On a weekly, I've been talking about this. one, two, three, four, 5 weeks in a row, came down again, one, two, 3 weeks in a row, and finally a big, again, profit-taking bar. And we are overbought, although MACD is positive in when we look at the as far as weekly goes. And this is a weekly, again, linear regression channel. Look, we did go outside the two standard deviation and came back, and we see again that 21 week support right there. But look at this huge volume. As far as copper, a big, again, big move the day before Thursday. Look at this big bar, the tail, and then stayed outside Bollinger Band, came back. We are right at 18-day moving average, and the momentum has turned negative. MACD has turned negative, but on a weekly basis, we're still doing good. But this is a large sell-off as far as the sellers came in and took some profit, but we still had a um, the weekly we've had this positive move, although we are still overbought, but MACD is positive. Platinum, huge move also. It just went to the lower edge of Bollinger Band, momentum down, and MACD just crossed to negative on a weekly. These are huge bars. Look at these bars. That shows you volatility. And look at this Bollinger Band's opening and look at the stochastics all over. So this support is almost about 1898, about 1900 as a support. When we look at Bitcoin, well, we've talked about Bitcoin now. We have become really embedded. It was overbought. So MACD is negative. We've been going above 18, uh, the moving average below. We did go outside Bollinger Band, but the buyers came in at 84,000. My big concern is on a weekly basis, and we see how we could never clear this 100-week moving average as well as this 18-week moving average. We are oversold, but we do have this support. I've talked about this at 74,000. So we want to watch that. It coincides with the Bollinger Band, but this has been a huge, as I mentioned, resistance. So let's see what happens. Also, when we look at we go back to the Fibonacci's, we see that this 80,000 has offered the support, as I mentioned. If we break this, we could go to 74,000. The 127.2% is 67,685. So let's see if we can hold this. Otherwise, we will have that 74,000 as a support. And on linear regression, also, we are right on the negative two standard deviation, but momentum has changed down. So, and C wave and then A wave, they changed to negative. As far as the crude oil, huge move. It broke above our resistance at 64, and we had gone outside the Bollinger Band, came back inside, but MACD is positive, and we are becoming embedded in crude oil again. A lot of geopolitics. On a weekly basis, we finally have broken above the 100-week moving average, but we are overbought, although MACD has turned positive. So let's see what happens this week. Would that reverse, or we still have that tension in the Middle East, and that will continue? When we look at again on the linear regression channel, this is a positive sloping linear regression channel. So although we've hit the upper edge or the two standard deviation, um, still momentum is positive. So we might have a little correction, but we are moving up. So times like this, what would you do is if we had a positive slope, if we go to negative standard deviation, we will buy it. If it was negative slope, then when it hits the two standard deviation, we will be a seller. So right now there's a positive. So it's kind of a wait and see. And when we look at natural gas, it's cold spill and all over almost almost over United States. We're talking about South and East and Midwest, and it just been on fire. We see natural gas was almost up 115% in month of January. And when we look at a weekly, look at this huge bar, and we are outside the Bollinger Band for 2 weeks in a row. Huge movement. So it has been a fantastic move. Talking about volatility, let's talk about expected moves. We see that S&P, after hitting again all-time high, hitting upper edge of expected move, closed inside. The same thing happened. Nasdaq hit upper edge of expected move, came back inside. And then Russell, on the other hand, had hit an all-time high just last week. Now we went right on the lower edge of expected move. The same thing happened. Dow hit the lower edge of expected move, came back unchanged inside. And the bonds actually went to the lower edge of expected move, it stayed inside. It was gold that after, how could you hit the way outside and pay attention to this? This is like gamma squeeze all the way up, all-time high at $509. And then within one day we came and went outside the lower edge of expected move. Amazing move. The same thing with silver, all-time high, almost $110, gamma squeeze, and then we went way outside on the lower edge. That's called volatility. And then financials, what we did, we closed right in a positive, right inside the expected move. Energy has been strong outside. We had the Exxon and Chevron's earnings. We did go had a, and ended up actually closing above the expected move upper edge. I mentioned about silver and Bitcoin. Bitcoin has well, closed outside this expected move, so I will watch for that. I hope that was useful. We will move on to trade of the week. Thank you.